Salesforce might be one of the undervalued opportunities in the stock market. There aren't many left. So let's take a look at the stock financials and see if it'd be a good investment to add to our portfolios. Now, currently, year to date, Salesforce is down 26.88% to about $242 per share. And this is fears due to AI taking so much its consumer base and its customer base. Pretty much, Salesforce is an American cloud-based software company. Sort of means they're a data company, okay? They store a lot of information for companies and customers. If you still don't understand what that means, because I personally really don't, obviously it's just data stored in a cloud. Yeah, but what does that actually mean? So I asked ChatGPT, explain to me Salesforce business model like I was 10 years old. So basically it said it's a super notebook in the cloud that keeps businesses track of all their friends. So the problem or the solution that Salesforce has for the problem is that it's a company has a lot of customers. They need to remember everyone's names, emails, etc. So if you do this like on a paper or if you wrote it down on a sticky note, it's going to be a huge mess. That's why Salesforce has it in a cloud, which is easy to access to. Basically a giant online system like Google Docs. And yes, this is very powerful, and I'll tell you why, and I actually use a real life example. I am in sales and we use a few CRMs, and it helps you write customers information. It helps you set a reminder date of when to call them again. It helps you put notes so you remember what you talked about, what the customer is going to need, etc., etc. And another thing, what I like about this business model is that it's not a one-time fee. It's more like a subscription. And I want to invest in this type of stock at the moment. I want something service-based and subscription-based, something that companies are going to need on a month-to-month basis and that they're going to have to pay month-to-month for, which is what Salesforce does. Now, if we take a look at this chart, it compares Salesforce price, and the middle line is about its intrinsic value to see what it would be worth. Right now, Salesforce, if you're considering an intrinsic value of $304, it could be priced at $233. So you'll be buying it at an undervaluation of 23%. But we have to take a look at more metrics to see if this will be a good investment. Now, if we take a look at some fundamentals, right, we can see that Salesforce has been increasing in EPS. However, the stock price has been dropping. If you're not new to the channel, or if you're new to the channel, this is something I like to see in companies. I like companies that are making more sales and their price is going down. The reason is this is just an indication that something is off, or there's maybe some political news or something like that is dropping the stock, not necessarily the numbers. And typically, I like to invest in stocks based on the numbers. I mean, if we take a look at the overall financials of the company, the revenue has increased, their operating income, their net income, EPS, operating cash flow. If we take a look at the annual free cash flow, is 12.4 billion, 33%, 28%, and 30% KGR. And just look at this beautiful chart of free cash flow. So they're generating more free cash flow, they have more EPS, and their stock price is going down. So if we take a second to compare their revenue to their debt to their PE ratio, look at this beautiful downturn on the debt. Look at this beautiful healthy line up on the revenue, and then look at this beautiful PE ratio going down. If we take a look at some of the competitors, we can go ahead and see that the free cash flow is a lot higher for Salesforce than it is for their competitors. And also on average, they have a lot higher KGR than the rest of the competitors, obviously, except Applevin Corporation, but they only have 2.1 billion in cash flow. This company has a lot more assets than it does liabilities, almost 3 times as much. And if we take a look at sort of how dominant this company can be, they have a gross margin of 77%, a net profit margin of 16%. Usually I like something around the 20% mark, but 16% is very good. Free cash flow margin of 32%, which is very good because they do pay a dividend. As we can see here, they don't have yet a 5-year dividend growth rate, but they have a payout ratio of only 15.64%, which is more than fine with the amount of free cash flow that they have. It's a dividend yield of 0.69%. That's going to give you a payout per share on an annual basis of $1.66. Now, this isn't the intrinsic value, but the analyst forecast for the stock. They're expecting an average cost of about $360, a high forecast of 464, and a low forecast of 227, meaning that the stock right now at its current price will be overvalued, apologies, at 6%. Again, as we just saw, the dividend yield and dividend per share. And something that is catching my eye, which is making me more intrigued of buying this company, is that they currently have a buyback yield of 1.19%, which means the company thinks the current price lower than what it should be, so they're buying back some shares, gaining more ownership of the company. And also, if you already own this company and the company itself buys more of its own self, your piece of the pie is a little bit bigger because you own more of the company. Hopefully that makes sense. And if we take a look at the intrinsic value, on a base case, it should be $308. On a best case, it's about $412. And the worst case is the company is worth $257, which will still be undervalued at 6%. Let me know what you guys think in the comment section of this stock. Do you really think AI is going to take away from its customers? I think it might, but overall, the data that Salesforce has, I think is priceless. Obviously, for AI, it's a lot easier to have that data, but I mean, Salesforce business model is just great. It's a great company to have. I use it every day on my sales job. So let's see what the future holds. If you enjoyed the video, please consider leaving a like. Don't forget to subscribe. And as always, I'll see you in the next video.